Again, this is Antonio, and I'm coming at you with another exciting video. In this video, I wanted to make a quick video about stock market terminology for people who want to learn how to trade stock. So I know a lot of times you look at videos from people like me and other more popular influencers, and we use terms that you may not know what they actually mean. You have an interest of how to invest your money, but you don't know how to go about and do certain things. So you always going about looking up different terms when people put those type terms in their titles, or they mention them in their videos. So I wanted to make a quick video to put those titles all in one specific spot. So without further ado, let's go ahead and start talking about some of the terms. I may butcher some of the names. Sometimes I have a speech impediment, feels like, but that's not going to deter me from keep making great videos just like this. And without further ado, let's get going. So first, let's talk about apes. I know a lot of times if you go on Reddit and you go on different places, like even TD Ameritrade, they might mention the word apes. And no, they're not talking about silverbacks. What does the stock term apes mean? All right, when used by Wall Street bets, the apes are retail investors who are bullish on heavily shorted stocks like GameStop, AMC, BlackBerry, certain stocks like that. That's what the term apes mean. All right, asset allocation. Asset allocation is the implementation of an investment strategy that attempts to balance risk versus reward by adjusting the percentage of each asset in an investment portfolio according to the investor's risk tolerance, goals, and investment time frame. All right, asset allocation. Let's talk about bond. A bond is a fixed income instrument that represents a loan made by an investor to a borrower, typically corporate or governmental. A bond could be thought of as an IOU between the lender and borrower that includes the details of the loan and its payments. Bonds are used by companies, municipalities, states, and sovereign governments to finance projects and operations. Owners of bonds are debt holders or creditors of the issuer. Bond details include the end date when the principal of the loan is due to be paid to the bond owner, and usually includes the terms for variable or fixed interest payments made by the borrower. Bear. Now, you hear about the term bear or bearish. So let's talk about bear first. Bear is a term for being pessimistic about a stock's price, believing the price will drop. Traders can think of long as another word for buy. If you're going long in a stock, it means you're buying it. If you already long, then you bought the stock and now own it. So basically, bear, you think the stock is going to drop. So you're probably going to get out. So when you hear a person say, I'm bearish on that stock, that means that they don't have faith or confidence. All right, let's talk about bull. Bull or bullish is basically a bull is a stock market speculator who buys a holding in a stock in this expectation that in the very short term it will rise in value, whereupon they will sell the stock to make a quick profit on the transaction. So if you hear a person say I'm bullish, that means that they think the stock is going to go up. They're going to put their hard-earned money in that stock, and hopefully they're going to make a profit. All right, let's talk about capital gain. While capital gains are generally associated with stocks and funds due to the inherent price volatility, they can also be realized on any security that is sold for a price higher than the purchase price that has been paid for it. Realized capital gains and losses occur when an asset is sold, which triggers a taxable event. Unrealized gains and losses, sometimes referred to as a paper gains and losses, reflect as an increase or decrease in investment value but are not considered a capital gain that should be treated as a taxable event. All right, let's talk about compound interest. Compound interest or compounding interest is the interest of a loan or deposit calculated based on both the initial principal and the allocated interest from previous periods. Thought to have originated in 17th century Italy, compound interest can be thought of as interest on interest and will make a sum grow at a faster rate than simple interest, which is calculated only on the principal interest. All right, diversification. Diversification is a risk management strategy that mixes a wide variety of investments within a portfolio. The diversified portfolio contains a mix of distinct asset types and investment vehicles in an attempt at limiting exposure to a single asset or risk. The rationale behind this technique is that a portfolio constructed on different kinds of assets will, on average, yield higher long-term returns and lower the risk of any individual holding or security. All right, dividend. A dividend is the distribution of some of a company's earnings to a class of its shareholders, as determined by the company's board of directors. Common shareholders of dividend-paying companies are typically eligible as long as they own the stock before the ex-dividend date. Dividends may be paid out as cash or in the form of additional stock. So, for example, if you hold stock shares into AT&T, that is one company that definitely pays out dividends. So, just having stock in certain places will pay you dividends in the long run, and some people are making tens of thousands of dollars just by holding their money in this certain stock. So that's something that you probably want to talk to your banker about or your broker about, which stocks pays out dividends. Dow Jones. Dow Jones was not a single person, but two of the three people who founded Dow Jones and Company in 1882. Charles Dow was the Dow and Dow Jones. Edward Jones was the Jones. And Charles Bergstresser was the company's third founder. In 1889, they went on to found the Wall Street Journal, which remains one of the world's most influential financial publications. What is equity? Equity, typically referred to as shareholders' equity or owners' equity for privately held companies, represents the amount of money that will be returned to a company's shareholders if all of the assets were liquidated and all of the company's debt was paid off in the case of liquidation. In the case of acquisition, it is the value of company sale minus any liabilities owed by the company not transferred with the sale. What is an ETF? An exchange traded fund, is a type of security that is tracks as index, sector, commodity, or other asset, but which can be purchased or sold on a stock exchange the same as a regular stock. An ETF can be structured to track anything from the price of an individual commodity to a large and diverse collection of securities. ETFs can even be structured to track specific investment strategies. So ETF means exchange traded fund. What is a fiduciary? All right, a fiduciary is a person or organization that acts on behalf of another person or persons, putting their clients' interests ahead of their own with a duty to preserve good faith and trust. Being a fiduciary thus requires being bond both legally and ethically to act in the best interests of the other person, basically. A fiduciary may be responsible for the general well-being of another, a child's legal guardian, but often the task involves finances. Managing the assets of another person or a group of people, for example, money managers, financial advisors, bankers, insurance agents, accountants, executors, board members, and corporate officers all have fiduciary responsibility. What is fixed income? Fixed income broadly refers to those types of investment security that pay investors fixed interest or dividend payments until its maturity date. At maturity, investors are repaid the principal amount they had invested. What is a gamma squeeze? And of course, I use my favorite hero here because, they always talk about gamma rays and all of that stuff. So I thought it was interesting. When stock prices experience rapid shifts, the conditions may be ripe for a squeeze. In this scenario, investors may find themselves buying or selling shares of stock outside their normal trading pattern in order to minimize losses. Gamma squeezes can occur as a result of widespread speculation about where a stock's price may be headed. For example, if a company is struggling financially, then institutional investors may decide to short the stock in the belief that the price will fall. What is a growth stock? Okay, a growth stock is any share in a company that is anticipated to grow at a rate significantly above the average growth for the market. These stocks generally do not pay dividends. This is because the issuers of growth stocks are usually companies that want to reinvest any earnings they incur in order to accelerate growth in the short term. When investors invest in growth stocks, they anticipate that they will earn money through capital gains when they eventually sell their shares in the future. What is a hedge fund? Hedge funds are alternative investments using pool funds that employ different strategies to earn active returns or alpha for other investors. Hedge funds may be aggressively manage or make use of derivatives and leverage in both domestic and international markets with the goal of generating high returns, either in the absolute sense or over a specific market benchmark. What is an index fund? And this goes back to EFTs because they all fall in the same the same umbrella. An index fund is a type of mutual fund or exchange traded fund with the portfolios constructed to match or track the components of a financial market index, such as the Standard & Poor's 500 index or S&P 500. An index mutual fund is said to provide broad market exposure, low operating expenses, and low portfolio turnover. These funds follow their benchmark index regardless of the state of the markets. What is an IPO or what is an initial public offering? An initial public offering refers to the process of offering shares of a private corporation to the public in a new stock issuance. Public share issuance allows a company to raise capital from public investors. The transition from a private to a public company can be an important time for private investors to fully realize the gains from their investment, as it typically includes share premiums for current private investors. What is an individual retirement account or IRA? Individual retirement account is a tax advantage account that an individuals use to save and invest for retirement. The IRS or the Internal Revenue Service also uses the term individual retirement arrangements and they still call it IRA to broadly refer to individual retirement accounts, individual retirement annuities, and other trusts and custodial accounts that act as personal savings plans with tax advantages for setting aside money for retirement. What are key performance indicators, or KPIs? Key performance indicators refer to a set of quantifiable measurements used to gauge a company's overall long-term performance. KPIs specifically help determine a company's strategic, financial, and operational achievements, especially compared to those of other businesses within the same sector. What is long-term debt? Long-term debt is debt that matures in more than 1 year. Long-term debt can be viewed from two perspectives: financial statement reported by the insurer and financial investing. In financial statement reporting, companies must record long-term debt insurance and all of its associated payment obligations on its financial statements. On the flip side, investing in long-term debt, it includes putting money into debt investments and maturities of more than 1 year. What is a mutual fund? A mutual fund is a type of financial vehicle made up of a pool of money collected from many investors to invest in securities like stocks, bonds, money, market instruments, and other assets. Mutual funds are operated by professional money managers who allocate the fund's assets and attempt to produce capital gains or income for the fund's investors. A mutual fund's portfolio is structured and maintained to match the investment objectives stated in its prospectus. What is naked shorting? Naked shorting is the illegal practice of short selling shares that have not been affirmatively determined to exist. Ordinarily, traders must buy a stock or determine that it can be borrowed before they can sell it short. So naked shorting refers to short pressure on a stock that may be larger than that tradable shares in the market. What is Nasdaq? Okay. Nasdaq is a global electronic marketplace for buying and selling securities. Nasdaq was created by the National Association of Securities Dealers, or NASD, which is now known as the Financial Industry Regulatory Authority, FINRA. The marketplace was created so that investors could trade securities on a computerized, speedy, transparent system, and commenced operations in February 8th, 1951. 71. 71. So it just made 50 years. The Nasdaq is just 50 years old. What is NYSE? New York Stock Exchange. The New York Stock Exchange is a stock exchange located in New York City that is the largest equities-based exchange in the world based on the total market capitalization of its listed securities. What is a bond option? A bond option is an option contract in which the underlying asset is a bond. Like all standard option contracts, an investor can take many speculative positions through either bond call or bond put options. In general, all types of options, including bond options, are derivative products that can allow investors to take speculative bets on the direction of underlying asset prices or to hedge certain asset risks within a portfolio. Now, this saying, what is a portfolio? A portfolio is a collection of financial investments like stocks, cryptocurrency, even though that's not listed here, I was supposed to, bonds, commodities, cash, and cash equivalents, including closed-end funds and exchange-traded funds. So keep remember ETFs, because you're going to hear about this a whole bunch. Exchange-traded funds. People generally believe that stocks, bonds, and cash comprise the core of a portfolio, adding cryptocurrency. And I'm going to say that again, because more people are getting into cryptocurrency and a lot of their money are going into that portfolio. And just think about it. Cryptocurrency is going to be here to stay. I just did a video how El Salvador is about to pick Bitcoin as their legal tender. So it's going to be here for a long time. So through this is often the case. It does not need to be the rule. A portfolio may contain a wide range of assets, including real estate, art, and private investments. What is prospectus? And I know you just heard me say that probably about 3 slides ago. So a prospectus is a formal document that is required by and filed with the Securities and Exchange Commission that provides details and an investment offering to the public. A prospectus is filed for offerings of stocks and bonds and mutual funds. The document can help investors make more informed investment decisions because it contains a host of relevant information about the investment security. What is a quarterly earnings report? And a quarterly earnings report is a quarterly filing made by public companies to report performance. Earnings reports include items such as net income, earnings per share, earnings from continuing operations, and net sales. By analyzing quarterly earnings reports, investors can benefit to gauge the financial health of the company and determine whether it deserves their investment. What is a REIT ETF? Real Estate Investment Trust, or REIT ETFs are exchange traded funds. Here we go again. That term came again. ETFs that invest the majority of their assets in equity, REIT, securities and related derivatives. REIT ETFs are passively managed around an index of publicly traded real estate owners. Two frequently used benchmarks are MSCI US REIT Index and the Dow Jones US REIT Index, which cover 2/3 of the aggregate value of the domestic publicly traded REIT market. What is risk fund return? What is risk-free return? I'm sorry, I'm doing a lot of reading here. I'm sorry about that. Risk-free return is the theoretical return attributed to the investment that provides a guaranteed return with zero risk. The risk-free rate of return represents the interest of an investor's money that would be expected from an absolutely risk-free investment over a specific period of time. And I'm sorry I butchered this whole slide. Doing a lot of reading is a total of like 44, 45 slides, so I apologize for that. Let's keep going. How do S&P 500 fortunes work? S&P 500 fortunes are a type of derivative contract that provides a buyer with an investment price based on the expectation of the S&P 500 index future value. S&P 500 futures are closely followed by all types of investors and the financial media as an indicator of the market improvement. Short selling. Short selling is an investment or trading strategy that speculates on the decline in the stock or other securities price. It is an advanced strategy that should only be undertaken by experienced traders and investors. Short squeeze. A short squeeze is an unusual condition that triggers rapidly rising prices in a stock or other tradable security. For a short squeeze to occur, the security must have an unusual degree of short sellers holding positions in it. The short squeeze begins when the price jumps higher unexpectedly. The condition plays out as a significant measure of the short sellers coincidentally decide to cut losses and exit their positions. What does stock mean? A stock is a form of security that indicates that the holder has proportionate ownership in the issuing corporation. Corporation issue sell stock to raise funds to operate their businesses. There are two types of stock, common and preferred. Proportionate. Say it repeatedly. All right, time horizon. An investment time horizon is a time period where one expects to hold an investment for the specific goal. Investments are generally broken down into two main categories: stocks, which is riskier, and bonds, less risky. The longer the time horizon, the more aggressive or riskier a portfolio investment can build. What is an uptick? Uptick describes an increase in the price of a financial instrument since the preceding transaction. An uptick occurs when the security's price rises in relation to the last tick or trade. An uptick is sometimes also referred to as a plus tick. All right, what is volatility? And I know you might hear this word from time to time. Volatility is a statistical measure of the dispersion of returns for a given security or market index. In most cases, the higher the volatility, the riskier the security. Volatility is often measured as either the standard deviation or variance between returns from the same security or market index. All right, weighted average. Weighted average is a calculation that takes into account the varying degrees of importance of the numbers of a data set. In calculating a weighted average, each number in the data set is multiplied by a predetermined weight before the final calculation is made. All right, what is XRT? XRT is an extension printed after the ticker symbol for a stock. It indicates that the stock is trading on an X-rights basis. XRT is an abbreviation for the word X-rights. X-rights means that the buyer of the stock does not have the right to purchase more shares at a lower price anymore because those rights have expired. XRT is printed on the ticker tape or displayed on the electronic ticker for clarity and to avoid disputes or confusion about where the rights currently remain. What is a yield? Yield refers to the earnings generated and realized on an investment over a peculiar period of time. It express a percentage based on the investment amount, current market value, or face value of the security. What is a zero investment portfolio? A zero investment portfolio is a collection of investments that has a net value of zero when the portfolio is assembled, and therefore requires an investor to take no equity stake in the portfolio. For instance, if an investor may short sell 1,000 worth of stocks in one set of companies and use the proceeds to purchase 1,000 in another set of companies. So these are terms that you probably will be curious about or see, but I just want to make a quick video for market terms for dummies. And thank you for sitting through this whole video, as some of these words were tongue twisters, but I got through it. And anyways, thank you for watching. Please like, comment, and subscribe, as I'll be coming at you with many, many more videos just like this. And without further ado, I will see you next time.